investment strategy going forward from here. Joining in is a very, very special guest on the show with me. I have Mr. Kranti Batini. He's the Director of Research at WealthMills Securities. Thank you so much, Mr. Batini, for taking out time. Let me quickly just do a wrap up for all our audiences to understand the way markets have shut shop, and then I will come to you with all the questions that all the investors may be having for you as well. So let's quickly look at the closing action. Of course, after 2 days of winning streak, we have seen a slippage in the markets today. The Sensex was down 435 points and it ended 0.7% lower at 60,176. Remember, yesterday was the day when we saw a sharp 1,300 point surge on the Sensex, 60,600 points at the closing level. But of course, throughout the day, we saw a lot of choppiness, and towards the end, the market slipped in trade. Talk about the Nifty as well. That was down 96 odd points or 0.5% lower. It ended below the 18,000 mark as well. Of course, in terms of stocks, you had the HDFC Twins, Bajaj Finserv, Reliance Industries, Kotak Mahindra Bank as the top laggards on the Nifty. And among the gainers, you had stocks like Adani Ports, NTPC, Tata Motors, Power Grid, and Tata Consumer Products as well. On the sectors front, you did see autos, FMCG, and power indices really rallying sharply despite the overall subdued move. And 1 to 3% gains could actually be seen on these indices, and the bank index was down 1% in trade. The broader markets, however, also added 1% in today's trading session. So let's quickly understand what did Mr. Batini really make of today's trading session, and what does he really believe in terms of the stock market's outlook. So Mr. Batini, how are you looking at the current volatile scenario after that 1 day surge that we've seen? And, bulls were seen coming back on the street, but today's disruption, how are you looking at it?
So actually today, I don't call it as a disruption today. It's a part of the consolidation mode of the market, because we witnessed last 1 month is the indices have recovered nearly 10% in Indian market. And also what we are witnessing a broad-based rally. The rally is so much strong that even the mid and small cap stocks are also bouncing back today's trade. And today, despite of the indices are closed in negative territory, whereas the action for this today is completely mid caps. So we can see some kind of quality mid caps which were beaten down in previous correction. Right now, what these stocks are completely bouncing back. What we are witnessing is the buying interest is again coming back in towards the mid-cap stocks and small-cap stocks. But that's where the investors need to be very cautious, because they would have experienced how the mid-caps behavior and how the mid-caps behaves in the downtrend of the market. But despite of the negative news across the globe and crude above $100 per barrel, right now, Indian markets again shown they are resilient and resurgent markets. And one thing investors need to and traders need to understand about is being positive in Indian market pays always.
Absolutely, sir. Now, in terms of sectors, we did see banks and financials really coming back yesterday on the back of the HDFC merger news. But again, they've seen a slight decline today. How are you looking at this entire space, especially at the backdrop of the kind of merger, the biggest corporate merger that we've seen in history of India Inc.? How does it change the dynamics of the entire banking and financial space? And how should investors really view this development? What opportunities open up for them?
It's actually, one thing is, if you specifically discuss about the banking and financial sector stocks, this is where the FPI interest was there in past few years. And also what we have witnessed is in past 6 months, there is a flush of liquidity. FPI selling was there. And banking and financial services is one of the victim of this humongous selling by FPIs. The new merger of the big boys, of HDFC and HDFC Twins, we can say, it gives a opportunity for the FPIs to look back. And what is the key concern about the major FPIs to invest in Indian market is we have stocks with very less free floats, but these kind of mergers will give an opportunity for the foreign portfolio investors who want to invest millions of dollars in Indian market. These kind of mergers gives an opportunity to look back in India with a good floats in Indian market. And overall, this merger gives the opportunity for investors to take the advantage of the stocks, because these twins, HDFC is just like a family jewelry. Every dip in these kind of stocks can give an opportunity to accumulate these stocks, because HDFC Bank, after a humongous rally in past 5 years, last 45 days, the stock touched a 52-week low. That's where the investors can actually accumulate these kind of stocks. And going ahead also, the stock can perform well, because it's going to emerge in few years as one of the largest bank in India in terms of assets. I'm sure it can go ahead above State Bank of India in the coming years.
Okay, I understood that. So that's going to be giving a lot of hopes to all the investors looking at this space for potential opportunities. Apart from the banking and financial space, there's one sector that showed electrifying moves today, and that's the power space. We did see a whole lot of stocks like even Tata Power rallying sharply. What is pushing these stocks higher, and is there momentum going to be continuing? Is there opportunity for investors to look here too?
One thing is, Sakshi, the valuations looks attractive in terms of the power stocks are concerned. And also, one of the background exercise that's happening in power stocks is their diversifying model. Right now, every power stock is diversify their businesses and increase their green energy footprints going ahead. That also gives one of the flip to these stocks for the investors to looking into these stocks, because ESG scores will improve, and farm portfolio investors can look into the Indian power story going ahead. This is one of the key reasons. The valuation plus the green energy push that's coming from these stocks are giving a renewed interest in power stocks.
Okay. And lastly, I want to also ask you any stock specific actions that you believe that investors can keep on their radar. Which are the stock picks that you would recommend for a long-term perspective? We've of course started this new financial year, and a lot of investors may be looking for some portfolio additions, some newer stocks to maybe build their portfolio, a long-term one. Any particular stocks that are on your radar, sir?
Sakshi, every dip, investors can look at the large cap stocks right now in this market juncture. Again, we are at Nifty at 18,000. So it looks the large caps valuation still there is steam left. Stocks like Reliance Industries and HDFC can be considered, and banks like ICICI Bank can be considered. Okay, there are ample of mid cap opportunities. It all depends upon how much risk appetite the individual investors have. But as of now, they can stick to the large caps for the time being.
Okay, stick to large caps for the time being, and just see what is your risk appetite at this point in time. The likes of HDFC and ICICI Bank are good to start off with in this space as well, in case you're looking from banks and financial space to add on to your portfolio at this point in time. Thank you so much, Mr. Batini, for sharing these insights on markets. Hope to have you back again to share more perspective on stock sectors and the overall market outlook as well. Thanks a lot for sharing your time with us.
Thanks, Sakshi. Pleasure is mine.